Let's begin this program, shall we, with the big issue. Markets worried about one thing.
If the epidemic become pandemic.
Global pandemic.
Is going to be more severe.
Right now, I think there's a panic.
A whole lot of panic.
We tend to take a longer-term view.
If it's one quarter, we can sort of look through it.
I don't think we're near-term dissuaded.
If this stretches well into the second, even to the third quarter,
the more this lags, the more this weighs on the markets,
then I'm more concerned about growth.
Market has to go further, price in a further risk of recession.
The global slowdown for the next few months.
If this extends itself,
you can kind of protect yourself with some more careful equity allocation.
The money is going somewhere, and it's going into high-quality assets.
This is the time to be defensive and go for cash and go for bonds rather than equity. That's the wise thing to do.
So the key question, for how long do you stay defensive? Joining me around the table today, Julian Emanuel of BTIG, Kathy Jones of Charles Schwab, and Stephen Englander of Standard Chartered. Guys, fantastic to have you with us on the programme. Kathy, I want to begin with you and borrow a line from Diane Swank of Grant Thornton, who said that it's basically up to the medical professionals to define whether this is a pandemic or not. But from the perspective of markets, we're already at the level of an economic pandemic, aren't we?
I'm not sure I would call it an economic pandemic. I think the sell-off in risk assets has been fairly orderly to date. I haven't seen the panic that people are talking about be that severe. But I do think that it's reasonable to assume that we're going to get a pretty significant slowdown in economic growth, at least in the first half of the year, on a global basis. And this is coming at a time when growth was already relatively fragile around the world and valuations were really high. So not too surprising the market's reacting as it is.
Julian, your take.
So when you and I spoke on radio Tuesday morning, our point on the markets was that we thought the price action was far too orderly to be calling a low. What we see this morning, what we think we saw at the start last evening, actually during the press conference that the president had, was the beginning of disorderly price action. And that, for us, as we approach the 200-day moving average in the S&P 500, which is essentially down 10%, we think it's time to stop thinking about selling and start putting your buy list together.
Let's pick out a couple of things there. What is disorderly about what you've seen in the last 12 hours?
Well, first off, the psychology has changed. The World Health Organization hasn't declared this to be a pandemic, but in conversations with people, what you see in mass transit, and certainly the tone of that press conference last night, was, in fact, making the declaration. And I would disagree, actually, with something that you said in the beginning, that the world is only focused on one thing. The world's also focused on next Wednesday morning, when it could be obvious that a less business-friendly Democrat could be the presidential candidate. That is a concern as well.
We'll be talking about the political situation a little bit later in the programme. Steve Englander, your thoughts, please.
Look, I think there are a couple of shoes that are left to drop. One is that even though the market is pricing in the fear of economic issues hitting the states and disease hitting the states, we haven't actually seen the emergence of clusters and concrete notifications and any concrete actions that are taking place here. Once that happens, I think that we will see another sell-off. Second thing, and this is kind of baked in the cake, you look at the ships leaving Asia. They're 40 or 50 ships, cargo loads going to West Coast ports have been canceled. We're talking about, some firms indicating they're shifting supply chains. But the key takeaway from that is that, and maybe they'll be able to restore it by the end of April or something. They're not talking about restoring it by the middle of next week. So I think that there's stuff that's coming that's going to impact or have an impact on in the second quarter. It's going to be more durable than just worrying about how many disease incidences we encounter in the next 10 days.